I am not a financial advisor, nor am I a financial analyst. I strongly recommend and stress that you should do your own due diligence and talk to your financial advisor before investing in stocks, ETFs, mutual funds, or any financial instrument. I share my knowledge for educational purposes only, and it should not be construed as an advice for buying or selling any financial instrument. Charts are the foundation of technical analysis. This is a line chart of BlackRock. Line charts are drawn by joining the prices at close of a trading session. This is a bar chart of BlackRock. Bar charts are the most popular types of charts. These charts show open if the open price is available, high, low, and closing price of a security. The highest point of each bar is the highest price a security traded during a trading session. The lowest point of a bar is the lowest price a security traded during a trading session. A tick on the right side of the bar shows the closing price of a security. If opening price of a security is available, it is shown by a tick on the left side of the bar. This is a Japanese candlestick chart. A candlestick chart shows open and close of the price by real body of the candle. High of the price and low of the price are shown by wicks of candle. One candle shows a complete trading session. For example, a 1-hour candle will represent 1 hour of trading session, or a 1-day candle will represent a trading session of the whole day. In this daily chart of CLR, white line shows 9-period exponential moving average. Gray line shows 20-period exponential moving average. Green line shows 50-period exponential moving average. And red line shows 200-period exponential moving average. Let us talk about support and resistance. Support and resistance are the most important concepts in trading. In this weekly chart of Nike Inc., you will notice that every time the bulls try to push the prices higher than 147.95, which is resistance, bears try to pull it back to 131.27, which is support. In other words, bulls try to push the prices higher and the bears try to push the prices lower. Support acts as a floor and resistance acts as a ceiling for prices. We can say that support and resistance are the classic supply and demand zones. In a free market, supply and demand are continuously changing. Charts of security prices give us a view of supply and demand in action. In this video, let us talk about a very important concept of support becoming a resistance, or a resistance becoming a support. Once the prices penetrate through resistance, it usually will become a support. Vice versa, if a support level fails, it will become a new resistance level. The yellow line in this weekly chart of Nike Inc. shows a break of price at 106.04, which has now become a new support. This happens because new bulls are stepping in to buy. These new bulls missed to buy when prices were lower than 106.04. This process, in which a support becomes a new resistance, or a resistance becomes a new support, is very common. When trading, you should always look at the historical support and resistance. These support and resistance levels can provide a sense of market sentiment at these levels. Changes in prices are usually a result of change in expectations of investors. Support levels usually tell that the prices will not move lower. On the other hand, resistance levels tell that the prices will not move higher. What are trends? There are three types of trends in which the stock prices move. These are upward trend, downward trend, or sideways movement. A trend will show us a consistent movement in the prices of a security. Trends show us a change in price level. Support and resistance, on the other hand, show us a hindrance in the price. Prices usually stop at the support and resistance levels. A rising trend will make higher highs, a downward trend will make lower lows, and a sideways movement will range bound horizontally. When supply and demand change, prices can penetrate through rising and falling trend lines. This is a 3-year chart of IJR ETF on weekly basis. We start from left to right. On the extreme left, you will see two downward sloping red lines that show that the security is in downtrend. In the middle, you will see two horizontal yellow lines that show that the ETF at this time period is in sideways motion or sideways movement. And then you see two green upward sloping lines on the extreme right that show that at this point the ETF is in an upward trend.